Hello, everybody. Joshua Hayes at BigWaveTrading.com. I hope if you're a long focused investor that you're staying safe in this market environment. It's pretty nasty, I'll admit. However, a phoenix is going to rise from the ash. It happens every bear market. This one will be no different. I'm going to remind everybody, if you think this is a possible 2008 financial crisis, heck, I'm open-minded. Maybe you're right. I don't know. I still don't see it as a systemic problem. We got to a 9% unemployment rate in 2008. We're at 4% now. We could get to 9%. Really don't see it happening. I don't think it's that bad. This is basically a Fed-induced sell-off now. It really picked up. I mean, Jackson Hole, and it's not even my opinion. Jackson Hole on this day changed everything. To normally have a 15-page statement, rip it up, condense it to 4 to 6 pages, I believe it was, and then to come out and be like, you are all idiots. None of you are listening to me. I'm going to create pain. He literally said pain in households in the stock market, and that's exactly what's happened since. That being said, we are extremely oversold in the short term. If you're expecting a short-term bounce, I'd caution that. If you're expecting a short-term bounce, that is prudent. We are very oversold in the short term. I am expecting a bounce next week. I believe it's dead cat. I just want everybody to be careful because not only are you dealing with tons of price resistance levels back on the way up, and you can watch previous video lessons where I've drawn them on the charts. I just wanted to clean up the chart. Keep it simple because more importantly, it's just the direction of the main moving averages. The 8 or 9 EMA, the 21 EMA, the 34 EMA, the 50, 100, and 200 SMA. Those slopes are very clear to me. The TTM trend momentum, TSV, MACD, Chaikin money flow. You go to a weekly chart. Tell you what, the one thing I do like, we are at that 200 weekly SMA. Now, remember, I wanted to do a 50% of the cash on hand load into long-term mega cap stocks that I love the management on, love the products, believe that they're going to, 5 to 20 years from now, we got some major winners. There's a couple that could definitely turn into losers. I don't think they will, but they might. But I was looking for, at the time, the 200 SMA was around 350. That's basically where the VWAP from the 2018 lows currently sits. I'm still looking to do that, guys. On the long-term side, there is no deviation on that methodology there. I do plan on still, if I can get SPY to close at 350 or below, I'm going to do that 50% add. But here on the way down. But here's the key. Just 50%. I'm not all in. If we get to then go below SPY 350, hit SPY 320, buying more. We hit SPY 300, buying more. We hit SPY 280, buying more. And if we hit SPY 250, I'm all in and am okay with us selling off further for any kind of potential bounce. Now, just to let you know, where is SPY 250 at? It's all the way down here. We would be back into the 2020 COVID sell-off areas. Do you really think SPY is going to fall that much? I don't. But if it does, I have game plans, and we'll get to work on that level, on the long-term stuff, because I want everybody to remember, no matter how bad the market gets, anytime there's a 25% or more sell-off, within 2 to 3 years, you've reclaimed those losses. So keep a historical perspective. The worst bear market ever without the Fed was that 86% decline in 1929. Since the Fed, the worst decline came during our 2008 bear market. That was about 57%. And then going down the line, 1937, 55%, 2000, 50%, 1973, 48%, 1932, 40%, 1968, 36%. So about the worst you get is a 55% decline. And if you look at it from the highs to the lows, the worst that this decline should ever get would be around SPY 210. But like I said, on the way down, I only got game plans to SPY 240. If it gets down to 210, fine with me. I know for a fact in 1, 3, 5 years will be higher. So I just gave you all those numbers from all the downtrends. Now, once the market bottomed, what was the average gain even with the 86% drawdown in the SPY for a year later? 54%. Once you bottom, you have a 54% return. What's the return after 3 years? Average, 86%. What's the return in 5 years? 132%. How many of those 1, 3, 5 years are down following a market bottom after a 25% plus decline? None. Not a single one. So if you're not an active trader, and if you have a long-term time horizon, and if you've not started to add into your long-term portfolios, now is the time to go. However, if you're an active trader, which I am, this is your weekly TSV, MACD, Chaikin money flow. This is your monthly MACD, TSV. Chaikin money flow is about to go negative. But what I want you to notice on this monthly chart of the SPY is the TTM trend momentum. It's gone negative for the month. When's the last time that happened? 2008. When was the last time it happened before that? 2000. Is it possible our cyclical bear is going to turn into a secular bear? Sure is. So that then brings me up to this point. I hear everybody looking for a bottom, calling for a bottom. Guys, it's a dangerous game to play on the way down. You normally want to wait for one to actually happen before you start calling a bottom. So we just had the worst September since 2002, 20 years. This is a bear market decline that most haven't seen. Guess who's seen it before? Ding, 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 ding. Me. So I'm not too worried. However, calling a bottom here, now that we're in this kind of decline, to me, would be completely silly to do something like that until you saw the equity put call ratio above and holding one. Now, just to let you know, on September 23rd, we finally got that equity put call ratio over 1. However, the very next day, we went right back below it. Now, if this turns into a secular bear market, where did the equity only put call ratio hit? Well, I don't have data before 2003 in stockcharts.com, but what I do see is at one point in 2004, the equity only put call ratio got to 1.26. In the 2008 bear market, it got to 1.35. We tapped 1 and it's come back. Any fear in that gauge? Negative. How about the VIX? Whoop. Did we get over 40? Can't even see 40 on this chart. There's 40. There's my line. You get above 40, you can start looking for bottoms. As long as you're below 40, it's stupid to look for a bottom. Notice in 2020, the COVID lows, you got above 40, you can start looking for a bottom. Let's go back. Let's do a weekly on this one, on the VIX. 2008, you get above 40, you can look for a bottom. Flash crash, I can't remember which year that was, 2010 or 2011, you look for a bottom. 2015, 2016, when we went lower, look at the VIX lower lows. 2018 lows, you're above 40. 2020, so there you go. So the VIX, I need the VIX above 40. I need that equity only put call ratio to hold above 1 and sustain above 1, and preferably print at 1.2 for any kind of bottom. So keep that in mind. Also, if you're looking for a bottom, now that you're in the waterfall stage of this decline, I'm going to remind everybody, until you see any kind of capitulation, we're just not going to have a bottom. What I'm going to need to see is that capitulation to even think about a bottom here and or Fed pivot. And I'll remind everybody, it was so funny because on this day, everybody was calling a market bottom on FinTwit. This day, everybody was calling for a market crash. Guys, whew, I tell you what, that sure is tiring. But bottom line is, do you see this bounce? Do you see that volume? First off, market bottoms are powerful. They're going to look like this hammer, or they're going to look like this. They're going to have this kind of volume and that kind of volume. But you're going to get some kind of extreme levels of fear. We didn't get it back then. We're not getting it now. Bottoms happen normally with very powerful one-day rally thrust. And then the follow-through days that happen are normally also very powerful. This was day one of a rally attempt. When we undercut the intraday lows the very next day, that failed that rally attempt. We're still looking for just day one of a rally attempt. So I've told you guys my long-term game plan on the way down. What would change that? Well, I still want to do the 50% load at SPY 350, no matter what. But my game plan on the way down remains the same. However, if that doesn't happen, all I need to see is capitulation, a bottom, and then those kind of candles I'm talking about. As long as we have leaders holding up, that'll be good. If we don't have leaders holding up, nothing to do. You get to see Fed capitulation via the internals or a Fed pivot, and then I'm going to need to see some clear strength and price action before I can even think of that occurring. So that's the plan long term. Quarterlies, we've been 100% cash in the 90-day hold accounts since February. We already went to 50% invested in 2021 when the bifurcation, the rotation started. We maintained that 50% allocation to the quarterlies all the way, even through quarter four, until February, where we went 0% cash. We are still 100% cash, 0% invested in the quarterlies. We were willing to take new trades on 21 EMA reclaims. I botched 2 trades this quarter. Both were good for 10% moves before failing, but they did fail. Nothing else has even triggered or happened this quarter. Next quarter, in Q4, we keep on selling off like this and or we don't bounce that much. I'm all in, man. I still think we're going to have a big quarter 4 rally, and I'm willing to be long the leaders. So that's my game plan for now. We'll see when that day comes. But for as of right now, this very second, I am telling you exactly what I'm doing in my long terms. I'm telling you exactly what I'm doing in my quarterlies come Q4. Those will be made available in the quarterly portfolio tab for all platinum members at Big Wave Trading. So if that happens, that's great. But I want to make mention of those quarterly portfolios. The S&P 500 this quarter is down 15%. I just calculated the growth portfolios, -11 and -12% this quarter if we would have just bought and held. That's beating the market. That's a good sign. It's the first time I've seen positive divergence in these numbers this year. So hopefully that's a good harbinger for Q4. Now, I want to remind everybody, also, Fed is still very hawkish here. There is no Fed pivot. They're going to hike 75 basis points in the next meeting. I wouldn't fight that. On top of that, I've been complaining that the Fed has been saying that they were selling their balance sheet. If anybody wants to think why I might have thought that June was a bottom, the Fed is just full of shit nowadays. You can't believe anything that they say. They are very hawkish, and now I would believe them because their verbiage is matching their actual actions. But right here, they said that they were going to sell off their balance sheet this year, but it wasn't until June. Looking at the chart over at the Federal Reserve website, it wasn't until May 20. Funny, it wasn't until July 6th that we had our first series of higher highs or lower highs and lower lows in the Fed's balance sheet. So it was like they were lying. They weren't selling off anything. Now, of course, we knew that they were going to speed it up in August and September. They have, in fact, been doing that. So they are unwinding their balance sheet. They're in the middle of very hawkish tightening. And if you want to see or watch anything for a potential sign of a reversal, watch these. J and K. It already cracked those June, July lows. Now, Telechart doesn't adjust for dividends. In their infinite wisdom, they decide not to do that. Thankfully, stockcharts.com, if you want to look at a true chart of J&K, take a look there. But it took out the June lows before the SPY did. The same thing happened with HYG. Then LQD. Look at this. It's leading the market lower. But if you think that that's bad, look at the IEF. And then, something I only saw this weekend. Look at the Treasury Inflation Protection Bond. Nasty. Nasty, nasty, nasty. So do you want to hint for a market reversal since the Fed is quantitative tightening? Watch the credit default swaps. Watch their balance sheet. Watch TIP. Watch IEF, LQD, HYG, J, and K. Now, remember how I told you the quarterly portfolios were also leading? Here's another thing to keep an eye on. SPY's making new lows. There is one index that hasn't broken below the June lows yet. IWM. It's not good looking. It's not pretty. Everything's pretty nasty on this. Ugly, 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 ugly. But these are things that I notice. So keep all that in mind moving forward. While everybody is bearish out there thinking the end of the world's coming, sky is falling, I'm always looking for the next round of leaders. And I sing, and I'm currently long even one. So here's one that we're currently long, MODN. This is the signal that we got on the swing basis. For the canceling positioning side, without a follow-through day, that ain't happening. But MODN, the signal was strong enough, everything was lined up enough to take this as a swing trade. So far it's working. Took profits on the way up here, took profits on the way up here. You don't do that in a strong bull market. You do this in this kind of environment. But look at MODN. Think about how bad this market is. And as you guys know, some of my long-term favorites, and they could all easily roll over. Apple is rolling over, but you know, Apple still above its June lows. Snowflake still above its June lows. Roblox still above its June lows. Tesla still above its June lows. Enphase still above its June lows, consolidating. VRTX, you know, Enphase 99 composite rating. VRTX well above its lows. Look at this thing. 99 composite rating. FSLR, one of the few that are holding up. Assume it's going to roll over based on what I'm seeing and the indicators. Assume it's going to join the rest, but it's holding up. Smaller one, 98 composite rating, BELFB, holding up really well. HLIT, 99 composite rating. What bear market? AGYS, 91 composite rating. What bear market? One that I've been noticing and just keep noticing, and I can't get an entry. I don't know. What do? Buy this breakout, handle this chop, buy this breakout, get chopped there. Now you buy this breakout with the way the market's looking. So this one's kind of confounded me. I haven't really found an entry. Now, obviously, in perfect hindsight, earnings gap holds the earnings gap support level. Could get long with this reversal, risking a gap fill. That's turned out pretty well. But in this market, once again, you know, you're really fighting the odds. But AZPN, 96 composite rating. DEN, 99 composite rating. And I go over all of this because I have a new swing trade idea. And I'm going to be honest with you guys. If we had a follow-through day, and we're good to go. I saw the VIX over 40. Got a follow-through day. Pure panic out there. Seeing reversals in the bonds. And then I see a chart like this. You know, in the canceling portfolio, I would easily probably put a third of my account capital to work in this name, risking to this low. In this market, I'm just going to treat it as a trade. So this is the new swing trade idea for me. If it fails, so be it. I'm not beholden to it working. But if you want to, you got a downtrend line connecting these two recent highs. So that's going to be the breakout level anyway. My game plan with DGII, I'm going to have a good to cancel buy stop limit order at 35.19 for my stop, 35.20 for my limit. And then I'm going to get long, and it's either going to work or it's not. And if it doesn't work, I'll start cutting my losses whenever it closes below the 50 SMA. And then I'll have my final cut loss level at 31.14. So I'll throw a hard good to cancel sell stop at 31.14. Now, in a bull market, might load it up. Why load it up? I don't know. I don't see anybody talking about DGII in the IBD crowd, so I could be missing something, guys. If I am missing something, let me know. There are no IBD quality mutual fund ownerships, but it is number 14. I mean, the industry group that it's in is number 14, has a 98 EPS, 99 composite, A+ accumulation distribution, 98 relative strength, hitting new highs well before price. Maybe I'm missing something. The momentum is weak. We're in a squeeze. Looks like it might fire long. Possible fake out breakout. These are not lined up. But monthly, I'm green on the CMF, on the bottom indicator. Weekly, I'm green. Daily, I'm green. So I'll give it a shot in this tape, but here's the thing. I'm sized appropriately. I'm not sized for a rip-roaring bull market. I'm not taking a can slim position trade. This is just a swing trade in a can slim quality name. And if it doesn't work, there's my final stop. Guess what? If it works, awesome. If it doesn't work, no big deal. All right, guys, we've hit that 20-minute mark, so I'm going to go ahead and end the video lesson there with DGII. Thank you for watching the video lesson. There is so much content on social media and YouTube. It's unreal, so I'm really thankful for anybody that watched this. You guys want to know what to do if you want to promote the YouTube channel. I don't need to say anything. And if you guys are interested in a trader, by the way, my day trading accounts are all at or near all-time highs. Very inactive this week. Day trading accounts are good. End-of-day swing accounts are about 99% cash. Canceling portfolio accounts are 100% cash. Quarterly portfolios are 100% cash. Long-term, that's my game plan. If you're ever interested in the full Monty, links below in the description box.